Welcome to another edition of the Market Review, where we bring you key developments in the financial and capital market as relates with the economy. Today, we'll be discussing leveraging the capital market to support Nigeria's economic growth as Nigeria continues to explore the opportunities of partnering with the capital markets to deepen the economy. With me to have this conversation is Professor Uche Uwaleke. He's the president of the Association of Capital Market Academics in Nigeria, ACMAN. It's great to have you on the program, Prof.
Thank you very much. My pleasure.
Thank you very much, yes. Before we begin our conversation, let's take a review of key developments that occurred in the capital market and financial market in last week. The National Bureau of Statistics released Nigeria's inflation rate for June 2021. It revealed that core inflation reduced from 17.93% in May 2021 to 17.75% currently. Also, food inflation reduced by 21.83% from 22.28% in May 2021. So there's been some slight reduction in the inflation rates. Also, last week, Oxford Foundry, under the University of Oxford, United Kingdom, and FMDQ Private Markets Limited, a subsidiary of FMDQ Holdings PLC, announced a partnership to accelerate the growth of Nigeria's startup ecosystem and nurture a future generation of young Nigerian leaders in entrepreneurship through knowledge exchange and collaboration. The board of directors of FCMB, that's First City Monument Bank Group PLC, announced the appointment of Yemisi Edu as the managing director of First City Monument Bank Limited. This announcement is subsequent to the end of service of the bank's former managing director, Adam Nuru. Also in the financial market last week, Guarantee Trust Bank PLC completed its reorganization to a holding company structure. Under the terms of the reorganization, a new operating company has been established. The corporate name of Guarantee Trust Holding Company, GTCO, will be used by the newly established operating company. Also, the Group Chief Executive Officer of the Nigeria Exchange Group, Mr. Oscar Onyema, ON, at the webinar hosted in collaboration with the Bureau of Public Enterprises and the Nigeria Investment Promotion Commission, said the NGX Group is keen to support both public and private sectors to achieve greater success in resource optimization. He said the group is also actively involved in contributing to policy formulation and advocacy to ensure that entities can thrive within an enabling environment. Those are the key highlights from last week in the capital market and financial market. We go on a break, and when we return, we'll have this very interesting conversation on leveraging the capital market to support Nigeria's economic growth.
Did you know that the average Nigerian spends 4 hours on their phone each day? I bet you didn't know that. That is, you spend 28 hours in a week and 60 days in a year. Don't worry, we're not judging you, at least not yet. Did you also know that only 1 in 1,000 of these Nigerians know how to make money with the same phone? With EGM, you get access to explore opportunities in the financial market. You can trade power, forex, cryptocurrencies, and the Dow. You can do all of this with just a few clicks on your phone, seeing that you're already pressing it. All you need to do is open an account, fund it, and start earning. Visit access.eagleglobalmarkets.com.
Welcome back, and if you're joining us, the conversation is around how the capital market can be leveraged to support Nigeria's economic growth. We have Professor Uche Uwaleke, Professor of Capital Markets and President of the Association of Capital Market Academics in Nigeria, as our guest. Prof, you've been an advocate for leveraging the capital market to drive Nigeria's economic development and growth. It seemed like you were like a lone ranger in that, but now we're seeing a lot of activities and prospects in this regard. Let's begin with the fact that the Senate passed the Petroleum Industry Bill, And from that legislation passed, there are prospects that the NNPC, the Nigerian National Petroleum Corporation, the state company, will become a limited. And being a limited, it can leverage the capital market, and shares, Nigerians can also participate as shareholders. How do you think that this should be galvanized in a way that the capital market becomes a vehicle for achieving this?
Yeah, thank you very much, Eko. Let me start by saying that the PIB, yes, has been passed by the National Assembly, but of course we know there are still contentious issues that must be resolved before in my view, before it's sent to the president for his assent, especially the issues around, what goes to the host communities. The PIB is something that everybody has, looked forward to having because of its potentials. It has potentials of unlocking the, that sector, the petroleum sector, in particular, and of course, attracting a lot of investments, into that sector. This country has lost a lot by way of investments in the petroleum sector, due to the non-passage of the petroleum industry bill. So it is cheering to note that the National Assembly, has passed it. As I said earlier on, if some of the naughty issues are taken care of, I think that will, for me, that's positive developments for the economy and the capital market, in particular. Now, if you look at the petroleum industry bill, you would find that it has some incentives, tax incentives for investors in the petroleum sector. You will also find that even in terms of tariff principles, it has provided for a cost-reflective, tariff structure, which allows, a reasonable return on investments. It has also said that anybody applying for, any investor applying for license should be granted the license speedily. So it has made provision for speedy approval of licenses. And, we also, believe that with the Community Development Trust Fund, meant for host communities, that it will go a long way in assuaging their feelings and reducing the restiveness and vandalism we have in that region. Again, that will open up the sector for a lot more investments. And if we have investments in that sector, especially in the downstream sector, this issue of petroleum imports, is likely to be a thing of the past. If we have more refining capacity made possible by the petroleum industry bill, of course, one should expect that at least we should be able to meet our local consumption and possibly also export refined products. So it's a good thing that the PIB, has been passed. Now, talking specifically with respect to the NNPC Limited, my view has always been to find a way of subjecting NNPC to private sector, governance structure and model. What we have in the PIB is a step in that direction, but it doesn't go the whole hog, because Section 53, I think, of the PIB only provides for commercialization of NNPC Limited. And of course, what commercialization still leaves the ownership and control of that company in the hands of the government. It only means that it should now be conscious of at least breaking even. So my recommendation with respect to the NNPC Limited is to find a way of including in the PIB bill the possible privatization of that company. I'm not just talking about commercialization, what the bill has provided for now is commercialization and not privatization. So if it is commercialized, yes, that window the capital market offers, won't be exploited. That window can only be, exploited if it is privatized, especially through the, securities exchange. Now, I recall that the initial petroleum industry governance bill that was approved by the 8th National Assembly made provision for that. In section 66 of that bill, of that petroleum industry governance bill, it's stated clearly there that the government shall within 5 years, from the date of incorporating the NNPC, divest not less than 10% of the shares, and within 10 years, divest additional 30% of the shares, to the public. So if that provision had been retained in the PIB bill, that would have been wonderful. But it does appear it has been expunged. So what we have there is just commercialization. But I think my suggestion is that going forward, there should be a provision in the PIB that allows for eventual privatization of the NNPC Limited, via the securities exchange. It doesn't have to happen now, okay? Because the structures are still not in place. But with time, there should be a provision that says in within so period, there should be divestment. And we're not talking about taking the whole thing there. It's just a fraction of NNPC Limited going to the public. Say 10% initially as originally conceptualized, and gradually much more. And this will not be too far from what has happened in other countries. Yeah. If you look at Norway, for example, Equinor is one of the successful oil companies, national oil companies we have in the world today.
Yes, Norwegian state oil company.
Partly because, yes, Norway, yes, Equinor. And that's partly because it's, partially, privatized. Some bit of the shares of Equinor, are in the hands of the public. We also have the Italian, any oil company. You have the Brazilian, Petrobras. Yeah. And recently, yes, we read about Saudi Aramco. Yeah. The Saudi Arabian National Oil Company also, going public. So it's important that part of NNPC is privatized. What that does is that it brings in, private sector touch, and also improves, corporate governance, of the corporation. So that's what I would like to see, going forward, and that will open up a lot of, financing opportunities for the company. Will also open up the capital market, in particular, with all the opportunities, that come with it.
Okay, Prof. Yes, very well noted. And that now goes to the next discussion, which is around the fact that the Vice President, Professor Yemi Osinbajo, in the conversation where a webinar hosted between the Bureau of Public Enterprises, Nigeria Exchange Group, and Nigeria Investment Promotion Commission, assured stakeholders that going forward, the federal government will be very, very intentional and cautious when they are going around their commercialization and investment drive. You've talked about privatization, not just commercialization. So we're seeing this synergy, which you've always been advocating for, between government agencies that have to do with investment and commercialization drive and the capital market. So this synergy and conversation with the Nigeria Exchange Group is a welcome development. What would you advise in terms of ensuring that you're not just saying that not just commercialization but privatization? The BP has talked about some key assets they're looking at commercializing, but you've also advocated privatization. So what are those key opportunities for leveraging the capital market when it has to do with state assets, considering these recent conversations, which is a welcome development that you've been advocating?
The first thing is to say that the synergy is a very good development. A very good development in the sense that even when you are doing privatization, it's very important that you get it right. From my experience in this country, this point can be overemphasized. Experience in the privatization of the power sector, for example, a lot of, I'm sure the government has recognized that a lot of mistakes were made. Yeah. So it's important that you not only get the right type of investors, it's also important you get the right model of privatization. And thereafter, even the funding of investors over a long period of time is also something that should be taken into cognizance, and that's where the capital market, comes in. Mm-hmm. So I think, as I said, it's a very good thing that NNPC, the Bureau for Public Enterprise, and NGX, having some sort of handshake. Is in the spirit of public-private, partnership. This administration, I must admit, has demonstrated commitment in that area. One good example that is happening now is this issue of a funding model for road projects. The funding model that is in the form of a tax credit initiatives, yes. Through which some roads are being funded by the private sector. I'm also aware that the initiative of the 15 trillion infrastructure development company is also meant to be a private a PPP thing, involving the CBN, the Social Investment Sovereign Investment Authority, and the African Finance Corporation, and some other private sector players. So this handshake between the public and private sector is something that would be good for this economy. Now, for purposes of investment, there is no gainsaying the fact that it's always important to provide vital information on the various investment opportunities in the privatization program. Now, the government has earmarked a number of government assets scattered all over the country. I'm aware, for example, of the plan to sell the NI, this Nigerian Integrated Power Projects. Yes. I think 5 of them, the Benin Generation Company Limited, and 4 others. Yeah. Okay, so these processes have to be transparent. These processes have to ensure that, as I said earlier, on the right type of investors, those with technical and financial capacities, are engaged, and it is the capital market that provides that transparency. So I expect that the NGS, of course, will be in a position to advise on, together with the BPE and the NNPC, on how best to, go about it. And eventually, when these companies, get into private hands, it's also important to have a provision in the agreement, a provision that also, requires them to go public, with time, just as the case in the private power, or the power companies that were privatized. There was a provision that with time they should go public. But the problem is, as we speak, they are still not able to find their feet, and that's because of the fact that from day one, we didn't get it right, as it were.
A very welcome development. Prof, I have, you just give us like a 1-minute response to this. What's your perspective on the recent collaboration and announcement of a partnership between the FMDQ private markets and the Oxford Foundry, University of Oxford? They are looking at improving enterprise development in Nigeria. You've talked about the need for collaboration between the capital market and even innovation hubs and enterprise development hubs, and this is happening. How will this catalyze support for the small businesses who can also, alongside when they scale, list on the market?
I read that a partnership in the news around it between the of the University of Oxford I said that, of course, I welcomed it. And I thought that the Oxford Foundry is, coming to fill a gap, coming into a space that the, private sector in Nigeria, could have also, been made to play, because also Sunday saw that need, and that's why the company is lashing on that opportunity. So it's a good thing that is happening. There's no gain saying the fact that Nigeria, has one of the largest number of tech startups in Africa. I think that has been proven. There was this report I read some time ago by Citigroup. Citigroup identified Nigeria as one of the 11 3G countries, in the world. And 3G countries are countries with very good, that have large growth potentials and profitable investment opportunities. So with these potentials in Nigeria, a lot of youths, young entrepreneurs in Nigeria, the need for training, cannot be overemphasized. I think what the partnership, is about to engender is to make it possible for these entrepreneurs to have access to skills, to upskill, whatever skills they already have, to have access to markets, and access to finance, and access to networks. Because I'm aware that Oxford Foundry, has a number of venture companies. Yes. So when the Nigerian entrepreneurs are made part of this program, they're able to interact with some other entrepreneurs from all over the world, exchange ideas, share knowledge, and that will go a long way to improve on whatever they are doing. So I think it's a good one. Of course, we know FMDQ private capital markets, has always been there to find an organized market for private companies, where again you can also have price discovery. So there's no doubt that when these startups eventually come up and they grow, they stand a chance of becoming members of FMDQ, private market, and that of course will be in the interest of the capital market, in general. So the opportunities are there, the job creation opportunities, and the potential growth of venture capital firms, potential growth of angel, the angel companies, and the investment communities, in Nigeria in general. So I want to commend the Oxford Foundry for considering Nigeria, one of the countries, for this kind of scheme, because from what I read, is going to involve boot camp. Boot camp means intensive training courses, and by the time they take the first batch of, I hear they want to start to train about 20 Nigerian aspiring entrepreneurs, okay, through a leadership program. So it's going to promote a lot of knowledge exchange and share the best practice. There's no doubt about that. And then it will, as I said earlier on, accelerate the high potential Nigerian startups, through the various training programs. So it's something that is well supported. And in that wise, I also want to encourage the private sector people in Nigeria to take a cue from what Oxford Foundry has done, and also identify some entrepreneurs to groom, to train. You find today in Nigerian universities, many Nigerian universities, the entrepreneurial centers there are still you know, under the universities. They are controlled by the universities. They are director of entrepreneurial studies, appointed by the vice chancellor, deputy director appointed by the vice chancellor. So the staffing thing is done by the university. And anytime you have a strike in public universities, once you have a strike, for example, the place gets shut down. So my advice is that these entrepreneurship centers in universities should not be run by universities. The private sector should come in, take over these centers and run them, okay? And they can do that in partnership with the university. But what is important is that the running of that place should not be in the hands of the university, so that competent people can be brought in to run them and possibly even commercialize their the output of those centers, and scale up the output and commercialize them. And that is also one way to encourage a lot of entrepreneurial startups in Nigeria. You remember that the Oxford Foundry Entrepreneurship Center of the University of Oxford was actually started by the CEO of Apple.
Tim Cook.
Yes, you're right, Tim Cook. Yeah, sometime in 2017, and it was meant to provide students and alumni of University of Oxford, with entrepreneurial and technology skills, that they require to succeed. So this same thing can be replicated here in Nigeria, where university alumni should take over the running of the entrepreneurship center, to ensure that the requisite skills, are provided. And that will, of course, go a long way in solving the unemployment problem we have in this country. So when people leave the universities, they don't roam the streets and be looking for what to do.
Okay, Prof. Very, very. One thing I always like your views are also you always bring some very interesting perspectives. Beginning of this year, you gave a lot of outlook of the need to leverage the capital market, and these are interesting times, like you said. Quickly, in a minute, recently, the Securities and Exchange Commission brought key stakeholders from government and all key stakeholders to look at how we can finance the solid minerals space in Nigeria through the capital market. As you know, we've been so reliant on crude oil, but we have abundant resources in the soil mineral space, from gold to bauxite to other very rich minerals that we can leverage and also drive economic activities and boost our revenue. In one or two areas, how do you see this being effected so that we can really create value from solid minerals?
You see, solid mineral sector is also another sector where we can use to create, provide jobs. And we, in this country, we talk about diversification. So how do we develop this sector and how contribute, to nations from records, the solid mineral center, and that's even talking about the formal sector aspect of the subsector of that sector. Okay, the companies that are in that sector, because over 85% we hear of activities that go on there, are carried on by what they call the ASMs, the artisanal and small scale, mining activities. So with that kind of thing, you find a lot of leakages in the system, leakages, through taxation. The government can't get tax. The government can't get royalties, and even the exports. Exports are usually through informal channels, smuggling, and the rest of them. So the challenges there are such that if the governments can find a way of organizing the informal nature of that sector, I think that will go a long way in resuscitating that sector.
Okay, Prof. Thank you very, very much. It has been very interesting getting your perspective on why we need to leverage the capital market for Nigeria's economic growth. And with what we're seeing already, the synergy between the Nigeria Exchange Group and, of course, the BP and NNPC. interesting collaborations between the FMDQ and, of course, Oxford Foundry, University of Oxford, and the recent conversations around financing the solid minerals space to the capital market. We're going to see more activities, capital market being at the forefront of driving economic development in Nigeria. And thank you very much, Professor Uche Uwaleke, President of the Association of Capital Market Academics of Nigeria, for your interesting insights and perspective on how this can be achieved. Looking forward to subsequent conversations with you on the capital market and Nigeria's development. Thank you very much once again.
Thank you. My pleasure. Thank you.
Thank you. And that'll be all for this edition of the Market Review. You can join our website, www.proexchange.com, to watch videos in the capital market. Click on investing. Go to Web TV, click on investing, and watch our videos on the Market Review. And also, if you want to read some interesting stories in the capital market, stay on that website, www.proexchange.com. Go on the right hand of the bar, click on Capital Market, and read our latest stories capturing developments in the capital market. Also, if you have questions or comments or views to express at the end of this conversation, if you have a view around how we can improve the capital market's contribution to Nigeria's economic growth, or how it can be leveraged better, send your views and comments to otobasi.abasekong@proshareng.com, as displayed on the screen. We'd like to hear from you. Also, follow our social media platforms displayed on the screen to get further updates on the financial and capital markets. Don't forget this period that you need to stay safe. Thank you for watching. Have a nice day.